Hey, Dan Passarelli here. What a crazy day it was today. Holy moly. Market was down a fair amount. Looked like it might have followed through a little lower, but wouldn't you know it, it turned around. Let's take a look at the charts. So here we have this very, very top-heavy candle with a long wick underneath it. Now, the most important thing is that it tested that 21-day moving average, which is oh so important, and closed decidedly above it. If we break this down into a 1-minute chart, we see we have this nice little happy smile with a big smirk on the other side. All right, so what exactly happened? There's a lot to unpack here. Well, if you look at the text, in fact, let's pull up QQQ. The techs weren't quite so exciting. They closed pretty much flat on the day. They still tested that 21-day moving average with a big long wick underneath it and closed decidedly above it. But still a red candle on the day, unchanged, not nearly as good a picture as the S&P 500. So what it appears that we're maybe going to be entering into is a new market cycle, a rotation, if you will, out of tech stocks and into cyclicals. Now, that's kind of interesting. It's kind of interesting. That started when interest rates ended up going up, when interest rates started going up a couple of years ago. We saw that. And so with a lot of the big funds being pretty tech heavy right now and selling out of some of them and getting into these cyclicals, just sort of these staple type stocks, it's a little telling that maybe it looks like people are resigning to the fact that rates are going to stay higher for longer. And we do see that when it comes to the Fed funds contract. We see that the most likely chance of an interest rate cut is a 25 basis point cut in November at this point. Remember when people are talking about March of this year? Holy cow. Now they're pricing it in. The contract's extrapolated data shows that most people trading it believe that November 7th, that date, could be the first cut. In other areas of the news, we wrap up this week, and next week is a really big one for employment data, which is kind of in a big way what it's all about, or at least what it's all about as far as, we got the PCE data today. That combined with the employment picture is going to give a really good picture to the Federal Reserve and all the people trying to figure out what the Federal Reserve's thinking too. So next week we have on Tuesday, we have JOLTS. We're going to see the job openings and the job quits. On Wednesday, we're going to see the ADP employment change. On Thursday, we have the regular weekly unemployment, non-farm payrolls. And on Friday, we have the monthly unemployment report. So lots and lots of unemployment or employment, depending if you think the glass is half full or half empty, news, and lots to watch next week. I hope that helps. This is Dan Passarelli. Have a great weekend. Bye.